On All About Stocks this week, Infosys is back in focus. Director V. Balakrishnan resigns on Friday. We'll tell you what this means for your stock. RIL stock in focus this week as it gets the cabinet nod to hike gas prices. We'll tell you what to do with your holdings. The week ends on a high for the Lal Street. The Nifty closes above the 6250 mark. What should be your investment strategy for the new year? And Hemang Jani, our investment advisor, has managed to make 16% in his portfolio. We'll tell you how you can do the same with your own money. Welcome to All About Stocks. It's been a very strong week for the markets. The RBI surprised the markets quite pleasantly, keeping the rates unchanged. And over the next half hour, we'll tell you what your investment strategy should be, especially going into the new year. We'll focus on oil and gas, on RIL, on Infosys. We'll tell you what your strategy should be with each of these stocks. We'll also answer the questions you sent in during the week. Remember, there's an email ID at the bottom of your screen. If you hear anything on this show that you'd like to send us a question about, feel free to write to us. Let me bring in my colleague Ajay to give us an update on the action on the Lal Street this week while you were in office. Ajay, take us through what happened.
Well, Faye, it has been a pretty rewarding week for investors back home in India. The benchmark indices have gained about 2% this week. Broader markets have outperformed, around 3% gains coming in for mid-cap and the small-cap indices. A host of triggers, of course, the big one coming in from the RBI itself. Much dovish policy this time around, status quo, no rate hike. That changed the sentiment on the Lal Street. On top of that, we also saw the FOMC meet, the US Fed, come out and announce a taper which was more or less in line with estimates and did not ruffle feathers in the emerging markets like India. And hence, the entire sentiment on the Lal Street turned around. Oil and gas participation coming back very smartly with Reliance Industries. But clearly what stood out this week was the resurgence in IT and pharma stocks. So be it the mid-cap stocks, all the large-cap stocks, all of them gained very smartly, and over 5% gains coming in for the IT as well as pharma index this week. Traders believe that this positive sentiment is likely to continue in the medium term before the earnings for the third quarter start pouring in January onwards.
All right, Ajay, thank you for that update. Joining us today in the studio is Hemang Jani, Senior Vice President at Sharekhan. Hemang, it's always a pleasure to have you in the studio. And I'm looking forward to talking about your portfolio a little later on the show, where you've made 16% returns over the last 1 year. But before that, let's talk about what Ajay just told us. Now, on this show, as early as last week, we talked about the fact that move into IT, move into pharma, and we've seen that over the last 1 week, defensives really outperformed. Is this something that you think investors can get in on right now? Do you believe IT and defensives are going to continue to outperform over the next few weeks, and this is something that we should move into or consider moving into?
See, what we have seen is that IT and pharma are defensive sectors, and they also have an inherent advantage of the currency movement. But somewhere, when you see the domestic economy pick up in a meaningful way over the next 6 to 8 months, some of the domestic-oriented themes could also perform extremely well. So rather than trying to figure out the sectors which could potentially outperform, we should have a balance between the defensives and some of the domestic-oriented themes, including financials. So that should be the investment approach for the retail investors.
Well, a lot of the investors right now are worried about the banking stocks. If we're talking about financials, in your portfolio as well, you have SBI. It's down 20% since we bought it last year. Now, at what point do you believe our banking stocks will start to turn around, will start to show us that promise that you've been mentioning for so long?
Absolutely. I think, as you see the domestic economy recovering, and this NPL cycle getting bottoming out, which could happen in the next, I think, 2 or 3 quarters, because we have green shoots in many pockets. So once you see that happen and the confidence coming back into the economy, banking as a sector would definitely do well, and it's a high beta sector. So when it starts doing well, the performance could be, exceedingly well.
So are you advising us right now to buy banking stocks? And should we be picky about what we're buying?
See, it definitely makes sense to have banking in your portfolio if you are a long-term investor. Now, the issue is whether you should be focusing more on the PSU or the private sector space. In terms of quality and the comfort, definitely the private sector banks score points over the PSU banking space. But at some stage, the valuation in case of PSU will become much better. So the upside potential also could be higher, at least for selective PSU banks.
Okay. Now, last time we talked about the markets, you said very clearly that there are two things to worry about. One is QE tapering, the other one is the possibility of another rate hike. This week, both of those things eased off from our market. So going forward, and we're entering the last week of trade in 2013, so let's look forward into 2014. Where do you see our market go over the next 1 year? Do you believe it's going to be strong and aggressive, and is that the stance we should take as investors as well?
Yeah, if you have a 1 or 2 year kind of a view, definitely the bias for the market is positive. I think this tapering thing, the world is far better prepared this time around, and the extent of tapering is also not too much. For India, there are two implications. One is that on the trade deficit part, it helps because the commodity prices tend to go down, and the bond yields in US also have spiked up to about from 2.5 to almost about 2.9. So in the domestic market, it will have some kind of a rub-off. So it's a mixed bag, but we think that the inflows will not get affected beyond a point, and you will see some kind of a impact of this rate hike not happening in the bond yields. Bond yields have cooled off. So overall, we continue to be positive on our markets.
And for the new year, if you were to, sort of look into the future a little bit and tell us what you see, what do you see?
Well, I think the election theme will start playing out in the next about 3 to 4 months' time, and once we have a little bit of clarity about who could possibly form the government, the market would start preparing for that. And we think that the way it played out at the time of state elections, you could see a much bigger impact on the market. So I think election would be an important factor that would play in the market. And also we have seen the performances being better. If you see the last quarterly numbers, most of the performances were much better. So if you see some impact even in this quarter, people would start expecting a much higher growth for next year.
What is your advice for investors who are watching right now as far as mid-caps are concerned in this market?
Well, clearly, if you're a professional investor or a fund manager, the information and the analytical skill set that you have is much better than what you would have if you're a retail investor. And we have seen that retail investors, they tend to get excited when the stocks really go up. But when the time to exit comes, they are not that fast enough. They do not have enough information on hand, and they are not able to show that kind of a performance. So as an advice, I would suggest that they should stick to the large caps, and they could possibly look at some of the blue chip names in the mid cap space.
Name one blue chip name in the mid-cap space.
There are a few of them. Cummins is one stock which I think is doing pretty well. Nestle would be one stock that one can look at. GSK Consumer is another stock one can look at. SKF is another MNC company which is a good quality mid-cap.
So then this is a combination of what you're saying in terms of domestic consumption going forward and the fact that it's an MNC which is a mid-cap stock.
Absolutely. The companies have their focus on the domestic consumption theme, and because of the better quality parentage and the lineage, we think that upside could be much bigger.
All right, I'm going to put those names that Hemang just gave us on a list right now so you can take a look at them. He was talking about stocks that he believes will do well given where the market is right now. Of course, we can't go any further without talking about Infosys. Very late on Friday evening, post the market closing, we heard that Infosys is having its 8th major exit from its management. In fact, I want to bring in Ajay to give us an update of how exactly that played out and what that could possibly mean. Is it restructuring or is Infosys in trouble?
Well, senior management exit continue at Infosys. In fact, this is the 8th exit which we are looking at among the top management in past several months. Incidentally, it comes at a time when the Infosys stock is actually trading at a fresh 52-week high. Most of the analysts we spoke to continue to remain very bullish on Infosys, saying that these exits are part of a conscious strategy from Narayan Murthy ever since he came back and took charge of Infosys yet again. Remember, for almost several years, Infosys was lagging its peers, and the valuation between Infosys and other stocks like TCS had risen quite a lot because of the underperformance on the operational front. All of that is likely to reverse now. Analysts who track the stock very closely also say that these exits will lead to fresh talent and young talent coming in under the direct leadership of Narayan Murthy, who is back in the campus now, and hence they are not very worried on the stock. They continue to remain bullish as far as Infosys is concerned.
All right, Ajay, thank you for that update. Hemang, we've heard so much of this, and Infosys has been, like Ajay was telling us, in the limelight because of Narayan Murthy coming back, taking the reins. He's making a lot of changes. When you look at what happened on Friday evening, how do you read into it? What does it mean?
Well, the trend was visible. We've seen that happen in the last about 3 to 4 months. Definitely, Mr. Bala has been a CFO for a long time, so his exit would have some sentimental implications for the company and the stock price. But the way we look at it is that the new management is being put in at senior positions, and we've seen the Infosys performance actually reflecting that change pretty well. So we think that, apart from the sentimental negative impact, I don't see any major impact on the stock price or the performance going forward.
In fact, if you say there's going to be a small sentimental impact possibly on Monday morning, should we use that opportunity to buy Infosys then?
Absolutely. We've seen that there have been few corrections on the way, and overall global environment is very positive, and because of the tapering, the currency could also depreciate, which would work to the advantage of the IT companies. So if there's any correction beyond maybe 2 or 3%, one should definitely look at accumulating Infosys.
All right. So on Monday morning, sit at your terminals and try and accumulate Infosys if you do see a correction. That's Hemang's advice right now. In fact, we have a question from one of our viewers. Vijay has written in. He has 100 shares of Infosys, which he bought at 2,418 rupees. He wants to know if he should hold on to that stock. Now, Infosys on your screen right now ended the week at 3,551. So he is making a profit. But like you said, he could possibly look forward to making far more of a profit in the future.
Absolutely. He can definitely hold on to it, and if there's any correction, he could also look at accumulating some more.
All right. So definitely hold on to that stock and accumulate more if you see a correction on Monday morning. Now, this is my favorite part of the show. We're going to talk about a portfolio that Hemang designed for us on this show. He designed it about a year ago. This portfolio now is sitting on an overall gain of 16.3% almost. Let's compare that to the Nifty. From the 4th of Jan, when this portfolio was designed, the Nifty is up 4%. Look at the massive difference. It's beaten the Nifty by 12% there, Hemang. I'm going to give you a quick list of stocks that Hemang has picked out. There's TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Zee Limited, Aurobindo Pharma, and Tata Coffee. Now, the portfolio is going to complete a year. And what's your recommendation on maybe taking some profits off the table? Do you believe the way it stands right now, we should continue to hold this portfolio?
Yes, I think we have a fairly diversified portfolio, and we had some mid-cap stocks also like Aurobindo Pharma, which have done so very well in the last about 3 or 4 months' time. So we think that with that kind of a diversification, one could definitely hold on to it for another probably 12 months or so.
Well, I want to ask you a fairly selfish question. For those of our viewers who are watching who want to also make 16% in 1 year like you did, give them one stock from your portfolio that they can buy today. If they didn't buy it on the 4th of Jan a year ago, that they can buy today and add to their portfolios that still makes sense at these values.
I think clearly the way things are, Reliance Industries could be one stock that investors could look at buying at this point of time, because a lot of is going for Reliance, both in terms of the new gas pricing that could be effective next year, and the production ramp up can also happen, and the core business of Petchem is doing very well. So we think that from a next 1 or 2 year perspective, Reliance could give a good upside.
All right, Hemang's first recommendation of the show is RIL. Now, we're going to take a very quick break and we'll come back after that and talk about RIL in detail. We'll talk about that gas price change, what it means for your stock, at what point you should be buying RIL on Monday. Don't go anywhere.